kick this off, I would love if all these fabulous panelists would introduce themselves and also share a few words about the company they work for. Should we start with Diana and then Nathan, Marcel, and Gaspard?
So I'm Diana Biggs. I'm CEO of Valour. Valour is an issuer of digital asset exchange traded products. We went live with our first product last December with a focus on the Nordics, now also in Germany. And currently, we're just under 300 million USD in AUM. We were actually acquired in April by DeFi Technologies, which is a public company based in Canada with a build-buy strategy supporting the DeFi ecosystem broadly through venture investments and through a build-and-buy strategy where we're looking to give public market investors access to the DeFi ecosystem. So I'll actually be moving into the Chief Strategy Officer role there imminently with some exciting announcements to come on Valour next week.
Thank you very much. Nathan, we are all excited to learn more about you.
Well, my name is Nathan Kaiser, and I am the General Counsel of SDX. SDX is a subsidiary of the Swiss stock exchange, the CEX group. And just a couple of weeks ago, we got our license as the first, in Switzerland, the first regulated DLT-based stock exchange. That's a lot of words and everyone matters. But yeah, so we're going to go live after the license, very short, in less weeks than my hand has fingers. And we'll take it from there, yeah.
Thank you very much.
Awesome. My name is Marcel Harmann. I'm a board member of the Crypto Valley Association. Pleasure to be here today. I'm also co-founder of DeFi Suisse AG. Just recently launched its first product called the ThorWallet. It's a DeFi, cross-chain DeFi wallet, basically. As the name suggests, it's a wallet, non-custodial. So you always have the keys to your coins, but it has also all the functionalities of DeFi. Or especially cross-chain DeFi, meaning you can swap layer 1 assets, native Bitcoin against native Ethereum in a decentralized way. Liquidity pooling, lending and borrowing, all the fancy stuff that DeFi can bring, we bring to you right out of the wallet.
Thanks so much. Gaspard, please go ahead.
And yeah, I'm Gaspard Peduzzi. I'm the CEO of APWine, which is a decentralized finance protocol working on building derivatives on yield. We launched August of last year and did several beta versions on mainnet. And yeah, so we started with the invention of this concept of future yield token, which is basically somewhat an advanced paycheck for liquidity providers, but which is also at the same time a future escrow contract to trade yield that is yet unrealized. Yeah, so we are a team of 10 people now. We raised some money and we're continuing to build more derivatives on yield, alongside with a dedicated automated market maker, which is designed to be the most efficient for liquidity providers for that types of assets.
Thank you very much. It's an inspiring, it has been inspiring watching your journey, Gaspard, because we know each other from the Western chapter of the Crypto Valley, and I remember when you were presenting the plan of APWine, and now you guys are a team of 10, which is really cool. So we see that a lot of centralized exchanges are also exploring various DEXs. For instance, FTX is invested in Solana. Binance has Binance Chain. And I'm curious, like, what is your take, Diana? Why do they do this? Why is this interesting for them? Why are centralized exchanges investing in DEXs?
Yeah, well, I think it's all part of the evolution of the space. If we look at the founders that created the first centralized exchanges, these are individuals and teams that were looking to broaden access to the crypto space overall, and that was the first iteration, the one that made sense and how things were being built at that time. And so these companies were, because of the nature of the technology and the stage we were at, and how like sort of the overall development of the ecosystem goes, building companies that were centralized, and then that was sort of the form and how you did it then. And obviously they're beginning to understand now, and you know, we see in the news the challenges that can be associated with that, predominantly regulatory-wise, and some of the crackdowns that are happening. At the same time, they're seeing the enormous growth that's happening in the decentralized finance space, and how we've evolved and what's possible with that technology and what can be built. And I mean, these are people who are builders, who share that same vision, and who are looking to promote access to it. So I think it's only natural that they would want to be part of that next evolution and phase of development, in whatever form, and investment and supporting the growth of these DEXs completely makes sense.
Thank you very much. Marcel, do you have something to add to this, or?
Yeah, absolutely. I think it makes a lot of sense strategy-wise. Well, first of all, if you have some money to spare economically, it just makes a lot of sense to invest in DEXs because they're like hot assets. Also, if you look at like cannibalization of your own clients, it's maybe some overlap, but not really happening because they're kind of different use cases. So it's fine as well if they do it. And then also long shot, I think it's kind of a very smart regulatory hedge. So if decentralized exchanges get over-regulated and the regulators overdo it, they still have the technology ready to just go decentralized. So yeah, I would do the same.
Mm-hmm. Yeah, this ties really much into my next question, which is addressed to you, Nathan. That do regulators represent a threat to centralized exchanges? So this is why they engage part of their resources in decentralized venues. Yeah, just especially with some exchanges not being 100% regulated. How do you see this from the SDX perspective, or?
Well, maybe just first from the decentralized exchanges a threat to the regulator or vice versa? No, I think it's actually the first one, because you were asking if the regulators are a threat. Maybe it's the other way around. I think what's happening in a larger picture is what's now called Web3, and I think that one is going to come, and so that new tendency for new decentralization is going to come, and in my personal view, it's probably that the regulators are trying to capture what's the Web3, or what it is now is very little. It kind of works. It used to not work, now it works, but it will work much better in the future. And it's probably going to be the other way around. It's going to be that decentralized exchange is something that can't be stopped. And I think a very simple, but not a totally wrong analogy would be the voice over IP with regard to the old telecom industry. And I think it largely works, but happy to discuss that, yeah, because it was something that people tried to stop, but it was just in the end unstoppable. So I don't think the regulators are a threat to Web3, no.
So you're saying that it used to not work? Like, what are you exactly referring to?
Well, I mean,
I'm not sure I follow. Just
right.
Let's
I mean,
unpack this.
we started to talk about decentralized exchanges maybe, I don't know, I started to hear it 3 years ago. I don't know if it was a talk before. And it sort of was very hard to use in the very initial attempts. But now we all know it's literally billions that are being traded on these decentralized exchanges. So it's no longer a question of an MVP. We're way beyond MVP. You know, and it took a while, but it only took very few years. You know, and now we're already there. So if you extrapolate that into the future, it's going to be really happening very fast. Yeah.
Thank you very much. Because we have 55 minutes on this panel and we are 10 minutes into it, I would like to encourage the audience to participate, and let's make it more conversational. So if we have a question now or later, then please raise your hand. Otherwise, I have a question. I have multiple questions. I don't see any hands. Oh, there is one. Right. Can you shout?
Yeah, I'll try and shout. You were just talking about regulation of decentralized exchanges. One of the challenges, if I understand correctly, decentralized exchanges obviously have difficulties KYC
I'm going to repeat the question so that everyone is hearing. Basically, the question was that decentralized exchanges, how are they going to KYC? How will they allow participation of institutions, but also individuals in the wider world of participating in DEXs? What is the solution? Because, for instance, there's Aave, ARC, which you guys know of. I'm sure many here in the audience know of. So what is the solution?
Andrew is a colleague of mine at SDX, so I'm
Oh,
not
okay,
going to answer.
all right,
but I
I
have
just
lots of things to say,
recognize
but
you.
maybe,
Hello.
yeah, I think this is yours, no? Or, yeah.
Sure. I'm happy to start and then hand over. Well, I would say blockchain technology and then DeFi as a derivative of it. It's like on a different pole than regulation or AML KYC, like they're opposite, and like they made to resist it. So it's actually going to be quite difficult, but maybe the solution can be actually then really simple. How to find an answer, how to combine the AML, KYC, and regulatory stuff for the future. Right now, I think it's just very important that they don't overdo it, so they don't basically stop the development of it. I mean, if they can somehow stop it.
I'm happy you said that. It's better that you say it than I say it, yeah. I think maybe just from from SDX points of view, obviously we kind of would have to make one bracket and make a difference between cryptocurrencies, which are or should not be or are not deemed securities. That's one world. That's what we're talking about right now. And then securities or Effekten, Wertschriften, which is a different world, which is where we are playing SDX. So it's really two very separate worlds, also in a regulatory perspective. And I think to your question, with regard to securities, KYC is here to stay for a long while, and it's easier to deal with. But I fully agree with you, when it's outside of the securities realm and we're back to real cryptocurrencies, the truth is there is no need or space for AML. It's not built for. It's built not for it. So yeah, let's just all keep going and slowly and not overdoing it. I'm very much with you. Yeah.
Diana, what do you have to add?
Yeah, I think what I would just say to that is that a lot of these regulations, there's important reasons that they're in place, and there's reasons that they are a key part of the backbone of the financial services industry. I mean, we do want to prevent terrorist financing and money laundering and the other things that can happen as a result. Of course, we also, I think, things that are important for the future going forward and that are certainly key with the possibility of what these new technologies can present is privacy-preserving methods, which will still ensure the safety of consumers on one hand, the prevention of illicit activities that we don't want to be happening. And so it's about striking the right balance. And I think what's incredibly exciting is that there are, like with these new technologies, with decentralized finance, we're actually enabling a lot of important transparency and interoperability and access that wasn't possible or that is very difficult within the traditional models. But we can also take the important learnings from those traditional models and some rules and aspects that need to be there and are there for good reason, and develop and adapt those with the help of these new technologies to actually ensure that these worlds can be built in a way that is safe, while also enabling this additional access and preventing some of these inefficiencies. And I mean, I think a lot of people have, one of the reasons that I got in full-time into the crypto space was working across sub-Saharan Africa and trying to do financial transactions, and that was all in the name of financial inclusion. But then, in certain like for cross-border transactions and other things, and for individuals who might not have identity documents, there's a lot of complexity there. But that's what makes this space so incredibly exciting, but we can certainly do that in a safe way, and there's a lot of opportunity for that, and I think it's incredibly interesting to see projects like Aave already experimenting with how can this be done in a permissioned way with KYC for institutions that require it, like these institutionals. We definitely want those capital flows to be coming into the space. And ultimately, there is ways to do that. I mean, I think zero-knowledge proofs are one of the most interesting areas of development that have come out and really come to light around blockchain, and that we can allow for solutions that will preserve privacy of individuals, but allow for the necessary measures that we need to ensure that things are being done in a safe way.
So then how can banks interact with DeFi beyond Aave? I mean, for instance, Valour, you guys are issuing ETPs of Uni or Solana, which are giving some sort of exposure to DeFi. But then beyond these two examples, like can you guys think of other examples how banks can interact with DeFi?
Well, certainly from, and again, I'll let the others speak in a minute, but certainly from our perspective, what we see is that DeFi ultimately will become the infrastructure of financial services. So it won't be two parallel systems, but similar to what we've seen in sort of traditional financial services overall. And I started in crypto back in 2013, but then between 2017 and 2020 was working with HSBC, so a traditional finance institution, where they were looking, and the role of head of innovation was to partner with fintechs. And we saw that same narrative happen, where initially you had this narrative of the fintechs are going to disrupt the banks and take over, and eventually that evolved into one of collaboration. And I really see that happening here, and believe that that's ultimately what will happen, is that it is about collaboration and this decentralization forming the layers. This sort of like the attempts or the first steps seeing this try to happen was maybe you could look at open banking as one example, where I don't know if people here have heard of open banking, but certainly in the UK it was about the large banks opening their APIs and data to fintechs and doing that in a way which would allow more consumer choice and more interoperability through certain different aspects of providers and sort of this marketplace model. Canada, Hong Kong, Australia, a lot of other geographies were all looking towards this. But of course, when you're trying to build an open system on top of what is inherently closed and siloed systems, there's a lot of issues with that, and it's just completely inefficient and doesn't really pick up the consumer traction that anyone was hoping for. And I think that one of the things that's most exciting about DeFi is that here we actually have that potential, because here we have things that are natively open, and a financial services system that is built on a natively, inherently open, transparent, accessible infrastructure is what we were all hoping for, and here that can actually be allowed. And I think that the banks, whether it is by force through something like having the open banking system and then the regulator telling you have to open up your data, or whether it's by choice, and we are seeing some financial institutions that are even opening up new units now that are specifically just exploring how can they start to interact with DeFi, that you will see like that convergence and the building on top of what's being created now.
Thanks so much for elaborating in more detail here. We're going to take another question. I see in this gentleman, and then we spare your question for later. Please speak up. I see Nat, and you want to take this. Come on, don't be shy.
I think I was just, thanks, Diane. I was hearing some of what you said, and I was thinking, this is maybe something we should discuss over a bottle of beer or a glass of wine. In my personal opinion, and that's something to be discussed, it is simply two different things. No? So you have a taxation system which makes sense and has its own legitimacy. And then you have an authority that is responsible for enforcing this. And this is one thing. And they'll try to do what they'll need to do to enforce it. And then you have private business, which can go in cash, or you can exchange apples against a car or a car against another car. And whether that's now easily traceable for the tax authorities is probably not the first consideration, or maybe should not be a consideration at all. So it is two different worlds, and there is a bit of an antagonism, fair enough, no, between doing business and then the tax authorities also relying on yourself declaring taxes, no? And then if you don't declare taxes, then you will be caught or not. There's a whistleblower or your ex-wife or your ex-spouse or whatever. It could be anything, no? But I think I wouldn't link DeFi to tax, or I wouldn't also link DeFi to tax evasion, because there's taxation and then there's DeFi. That's how I see it. But please, yeah, Diane, you want to say something?
No, I don't see why it's different than anything else.
Yeah,
I
exactly.
mean, you report your taxes. There's a lot of ways that you could be making income that isn't seen, right? Well, like different tax regimes around the world, as someone with multiple passports, that's like a whole other conversation, as you say, around which ones are better, which ones are worse. But we're in Switzerland, so that's fantastic.
That's good. Not just the mountains and the lakes, but other aspects are to it that is good in Switzerland. We will get to that as well again. But Nathan, you mentioned the billions, or as in when it comes to trading volume in DeFi, we've seen a massive increase since last summer, and new records have been hit when it comes to volume. Have you seen the volume increase the past quarters? Gaspard and Marcel, or Marcel, Gaspard, take it in order you prefer, and also what do you like if we look ahead? What do you guys think?
I think one key KPI that has been constantly evolving the past few years, like the one thing that we changed on the slide is the total value locked in DeFi, and we crossed like 100 billion recently, but that's not the most relevant one. And I definitely think that moving forward with the DeFi protocols, we had some decentralized exchange that really changed the game with automated market maker, for example, that created really permissionless exchanges. And now on top of that, you have like new types of tools, derivatives, huge projects that have been building a very complex exchange for years, for example, DEX and so on and so forth. And I think now it becomes more and more usable. I think the scalability issue that have been like an issue since the beginning is something that start to actually being solved in some ways as well. So I think for the end user, it starts to be way more easy to leverage DeFi. And that's one thing. And the other is that now the more you use DeFi, the more you use actually tools that are built on top of tools and that are also built on top of tools. And I think like that's how finance is built. And so the volumes are raising quickly, and the way the protocols are using this liquidity and the volume is quite more efficient as well. And that's very important because from the last topic that was, maybe in the regulation side, sometimes there is like centralization versus decentralization. And it's not much, it's not much a battle against, centralized against decentralization. Eventually DeFi, what wants to do DeFi is more some kind of arbitrage. So if you want to make a profitable arbitrage on what is the market currently, then you need to build profitable paths. And I think that's what is currently being built with huge protocol like Aave that now have the manpower to not fight the regulator, but work with them and create huge bridges that will increase the flows of liquidity directly in DeFi. And so I think that's where we're at. It's just much more usable, and there are much more liquidity, and that's like some kind of network effect that is really being profitable for the DeFi ecosystem at the moment.
Thank you.
I think another very simple way to look at the fast growth that DeFi has is just the trading volume, like daily or monthly. And this is pretty much exploding. Right now we're somewhere between 8 to 10 billion transaction volume per day combined, all DEXs combined, with Uniswap taking the majority of it. But if you calculate that for a month, it's like 300 billion a month trading volume, somewhere around those numbers now. And a year before, 12 months, we were maybe at 50 billion. So it's like 6 times. And if they keep on banning crypto, it's just growing faster.
Yeah, so exciting to see that. Do you still have your question?
Yeah, and the question is related to the first DeFi. That is like, how do you see what's the, how we call it DeFi 1.0, right? I mean, that now like kind of trend 2.0. What do you see the difference?
So I will repeat the question. Let me know if this is clear for you. The gentleman is referring to DeFi 1.0 and then DeFi 2.0 or 2.0, if you will. So what is the difference to you? I don't know if there is a universal differentiation to this. If I see Jérôme Détiché here coming in, so if he has an answer to that, but I'm not sure that this differentiation was made so universally.
Yeah, generally
Okay.
I would just say it's very modular, and as you just explained, like protocols are building on top of each other now,
Okay.
Growing and relying on each other. This will continue, and then maybe it evolves into what Diana was mentioning, that in the end you don't have 2 parallel systems, but in DeFi will be the system that we use, and it's just a morphosis, like a fluid change from one into the other, with continuous improvements. That's how I would see it.
Now, related to the taxation, I would like to know, because different countries have different law, but in Switzerland, I heard that you guys don't have any, when you change, the token to the fiat money, you don't need to pay anything. But some countries pays 30%. So
Yeah.
I want to see, how you guys think about this way, because if there's no fiat connected, so there's no tax here. I mean, it's really hard to trace. So that's my question.
Do you want to take this, or should we stick to the decentralized, centralized exchanges topic? This is also
Again,
something.
that's why I say taxation is a separate thing. No,
It's not a tax
But
panel,
happy to,
sorry.
happy to chat.
Joking,
Yeah,
but very happy to. So I think this is something what you can guys discuss at the beer, as you mentioned. So Nathan, when we had our prep call, you said that different target audiences require different regulation or different solutions, retail versus institutional. What's the demand for DeFi among your clientele, as in SDX clients? Like, what's their hunger or appetite towards DeFi? And do you believe that regulators will try to regulate DEXs even further than what is the plan now? So. But yeah, I'm super curious what the typical SDX client wants.
Right. I think maybe that question also leads me back to the previous question, which we could probably expand upon, which is this DeFi space with the various chains and protocols, and then the traditional finance system, and then how are they linked? I think it's kind of goes into each other. So what we do at SDX is clearly, what we today do at SDX is clearly very different from what we're actually talking about. Again, because we do security. So what's a security? It's a bond or a stock. I think for easy explanation. So if you buy a bond or if you buy a stock, that's a security. That's what we do. And that's definitely not what you guys do. That's what you do, but not what Marcel does, no.
With
and
synthetic assets?
Well, and then there's the overlaps, and then it gets really interesting. But let's okay, that's why we're here, no? Exactly, yeah. And then there's synthetics, and others, and wrappers of all kinds, and yeah. So in the security space, it's much more regulated. What we do at SDX is we cater to the banks. So what we are is really the very lowest level piping infrastructure level. So it's called capital market infrastructure. And that's what we do. So the banks want to provide stocks and bonds to their clients, so that's you. And then we do the piping so that the bank A with Peter can sell Peter's stock to the bank B with Mary. You know, Mary can buy Peter's stock. And we do the underlying transaction or infrastructure layer. And then, yeah, so we're not doing non-securities. We don't today do cryptocurrencies. But we're looking at it, obviously, every day from 8 a.m. to 6 p.m. or later. And then the question is, how does that relate? What would SDX do, or what will maybe SDX do in the future with regard to cryptocurrencies? We're not going to go into DeFi just now, so you're all cool. But what we're looking at is, again, doing the same thing. We don't want to compete with banks. We want to provide a service layer to the banks. So we're looking at the possibility of providing cryptocurrency infrastructure to the banks. And what does that mean? Custody, trading, settlement. That's what we do, yeah. So, and then we look afar, we see the DEXs, and it's like, oh, a lot going on in the cryptocurrency space. So let's see how it goes, yeah.
Thank you. So there is an appetite, definitely, and you're exploring that.
And we're absolutely seeing that as well. I mean, what Valour's products essentially are a bridge between traditional finance, mainstream investment channels, and digital assets, and making digital assets, and increasingly with a focus on DeFi ecosystems, accessible to investors through mainstream investment channels. And we're seeing a lot of appetite, both on the retail side and the institutional side. And there's different reasons why people would choose to gain their exposure to these digital assets through these types of vehicles being traded on traditional stock exchanges. But certainly with the types of products that we're building, we're actually providing exposure at the closest to fair value of any product on the market, particularly given our low fees, or for our Bitcoin and Ethereum products, 0 fees. And because of the nature of these ETPs, unlike a fund product, the costs of the actual trading isn't passed on to the consumer or the investor who's purchasing those. So there's a lot of advantages there. And then with the ability to gain exposure to these through your bank or broker as a traditional product, there's also the possibility for tax advantages depending on the tax-free savings accounts in your country. Just mentioning that, given the interest in tax here today. So that is another fantastic thing about these products as well. And the appetite is definitely there. Yesterday we launched the world's first Uniswap ETP. And then we're just seeing an increasing amount of demand from investors, similar with our recently launched Solana products, to be able to gain access to those DeFi assets through their banks or brokers.
Clap, clap, clap. Very nice. So there was the word interoperability mentioned, and I'm curious. This is more addressed to you guys here closer to me, Marcel and Gaspard. That what's your take when it comes to interoperability for decentralized trades between layer 1 assets? If you can allude to that.
Yeah. So probably most here know that, like, Uniswap, as example, is the biggest decentralized exchange. It's all based on Ethereum. So if you actually want to trade Bitcoin, you need to wrap it. Wrapping is okay for the time being, but it's not so cool because it's a risk, right? So in the end, you want to swap layer 1 tokens fully decentralized, and like it needs to happen eventually. There are not many players around. ThorChain or ThorWallet, we can do it at the moment. There are some other projects working on that. And well, basically, I think it's one key pillar for the DeFi space to give the people that freedom to exchange tokens natively with each other. So that interoperability is super important, and it just needs the technology. The development needs to continue, and it's just a matter of time, basically.
Thank you. Gaspard?
Yeah, I would add, so currently in the DeFi ecosystem, the current plan, I guess, for everyone is just to deploy everywhere that there is liquidity, because because you need that to exist, and also you don't want someone else to take your place in another side chain or in another chain. But that's like step one. And I know that like a lot of big players that are doing that at the moment, first they capture liquidity and profitability of different chains. And then behind the curtains, they're working on some kind of interoperability solution. So it can be in-house, meaning that it will be handled by the protocol, but at the same time, you have protocol that are focusing just on that issue. And that's a huge challenge. So I have a somewhat different opinion on the wrap Bitcoin thing. I'm like a big fan of atomic swap or like more trustless and decentralized solutions. But then tokenizing this kind of asset in one chain or another, of course, implies some kind of risk due to the pyramid of cards that you're building. But at the same time, it makes it very usable in terms of liquidity and collateral. And it's just like about optimizing how you handle the liquidity, the trades, everything that happens. And I think that's working pretty well-ish, let's say, in the DeFi scale where we agreed to use different kind of product with that standard. But yeah, so a lot of product building, focusing on that issue, how to connect chains, how to make that very seamless, even for developers, because so as a smart contract developers, when you deploy on one chain and then you have to deploy on the other, and it means that the user will have to interact like separately on all the chains, it's a mess. So we need to build bridges that will be completely invisible for both the developer and the user, and that's something that is being worked on a lot currently.
Yeah, that's why at the beginning I said that in order to maximize the benefits of decentralized finance, you need to be quite an advanced trader. Alison, please, what's the question?
Thank you. I think you alluded to this, but one of the benefits that blockchain settlement brings is the ability for instant settlement, so no need for collateral or a buffer of days. And I just recently read a critique that said actually having a buffer of T+2 days to settle is a good thing because you avoid a lot of systemic risk. My question for the panel is instant atomic exchange the goal and a good thing, or is it too far?
I'm happy to repeat the question so that everyone in the room hears it. So Alison is asking if instant settlement is really a true benefit or a true advantage when blockchains communicate with each other, or when we use a blockchain as underlying technology, or the 1 or 2 days is actually better.
I would say yes. Yes, it's the goal, as long as it is trustless. And like that is the thing that is being brought to the ecosystem. Like we can do that instantly because it's trustless, so we don't need to wait for someone to approve it. But I do agree that making things too fast is not necessarily the best solution, and we still need to be sure that we are doing that in a correct way. And the more efficient you want to be, the more careful you have to be as well to build some very strong technology that is not just like some compromise elsewhere.
Maybe I can add to that. Yeah, Gaspard, I think that's exactly the first sentence was the point. No, if you are in a trustless environment, then you'll deal with liquidity and prepayment within a trustless environment. We know how pools work, and so somebody needs to pre-fund, prepay, pre-put something in it, and that works. And then you're okay within that framework, trustless for all parties involved, no counterparty. You're totally fine with T+0 or atomic settlement. But when now I come back with my old securities, in the securities world, T+0, we've seen that at SDX, is actually sounds very good on paper, but then you run immediately into pre-funding problems and prepayment problems. And then you're like, oh wait, T+2 is actually kind of cool, it works and it's not broken. So in a trustless environment, T+0 atomic settlement, very cool, works, because somebody will trustlessly also pre-fund and pre-fill the pools. But in securities, not so easy. Yeah. We'll see how that and where that goes. We actually, even at SDX, we only know it's a question, but we don't know the answer yet. Yeah.
Just as like operating between both worlds, I definitely see a lot of advantages to having the option of being T0, of doing instant, and then having the ability to build your risk mitigations around that, rather than being stuck with the inability to change and having to wait for 2 days, especially when you see the option of what you can do without it, and kind of being caught in the middle. So I think definitely it's something to strive for, but of course bearing in mind all of the potential risks and then building around that possibility in terms of what actually you do need for your risk mitigation, and using it where it does make sense, without being sort of, stuck in without the choice. Or having it there when it may not be needed, and depending on the instances, and having that sort of flexibility and the ability to design with the best possible or the most efficient solution as a possibility is extremely exciting, but bearing in mind the risks.
Thank you very much. I'm going to take 2 more questions, and then we have 10 more minutes to wrap up this panel. So I seen a question there. If you want to shout or... Okay.
You mentioned the rise of DeFi. How do you see the demand for regulatory reporting and regulatory risk management on this, or the demand from the regulator in this area?
Not sure if we all got the question. I would love to repeat it, but so can you repeat your question, and I will also...
When you look at DeFi and the decentralized aspects, right, and the rise of there's a lot of liquidity in this market or getting into this market. On the other hand, the demand for regulatory reporting that the regulator has in this market. Do you see their relation, or will it not be have any impact, the regulatory reporting, regulatory risk management?
Okay, so the question is that with the rise of DeFi and seeing more and more or higher and higher volumes when it comes to decentralized finance, the regulators are coming after big bucks, big money. So is there a parallel, is there a correlation between these two, if I understood the question correctly?
Am I the lawyer on the panel? Is that it, or no? You're not a lawyer. No.
No.
You're legal. You're representing the legal expert.
I mean, I don't want to always talk.
You're a lawyer, but not anyone here is a lawyer.
Okay. So I think that's what I said before. No, the weird thing in DeFi, and you guys know, is that first of all, there's not really an entity. You know, there's maybe a coder who coded the code and deployed the code initially, but it is the D stands for decentralized. It's something that often gets forgotten. So there is no entity to be regulated that kind of hampers, the regulator. And then there's no counterparties or counterparty risk. There's obviously actually not even a counterparty because it's trustless. And what happens with the current regulations is they always think of big entities like the big bad boys that don't behave well. And maybe some small maverick boys and girls that don't behave well. And they try to regulate that, but here we don't have that. And they always think of counterparty risk in all shades and all that, but we don't have counterparty risk. So it just doesn't match. So that's why I say it's not the regulators. There's no regulatory reporting requirements on a DeFi protocol the way DeFi works. It's more that maybe the regulators and the legislators will need to think about, well, what would even make sense? No, if anything makes sense. Probably something makes sense. Then we're back to what Diana said. We still have some issues that we need to deal with legitimately. But how to deal with it, actually, we don't really know. Yeah.
But the regulators are already thinking about this. I mean, we know through we know that they are in discussions with a lot of the big DeFi players, and that they're actively looking to understand this. And just as we saw with crypto, I mean, we saw a lot of these same narratives come out. Will regulation destroy crypto? And it was just sort of crypto. And I think we're actually sitting in a better place now, and we have an advantage in that there's already been time for that education, which is so important for regulators to start to understand, okay, what is this technology? What are the possibilities here? It's more real now, and so they're starting to get their heads around it, and there are more industry bodies now that are actively engaging with regulators. The protocols and the developers, I would say, for the most part now know how important it is to start that dialogue. We've seen what can happen. So I think that's something that's starting. It's obviously, we're still in the early stages, but it's fantastic to see that kind of collaboration and dialogue already happening.
And just what comes to my mind is from crypto Twitter, WAGMI, as in WAGMI in DeFi. So we're all going to make it to some way in DeFi. So I want to give you guys the opportunity as well to ask a question from one another. So if you have a pressing question to your fellow panelists, then please ask away. Otherwise, we arrive to my closing question. Okay, who should it be? Like, let's pick. It's hard. Okay. Yeah, it's a very active hand movement. Please shout away, shout out. Okay, I'm going to repeat the question. Basically, the gentleman is asking if all the regulators who are going to decide of the future of decentralized finance, do they have the right knowledge about how blockchains work, how decentralized finance works? Is this Yeah, I guess the regulator has to hire more and more engineers, more and more blockchain engineers to understand. Yeah.
I'd
Marcel?
like maybe try to kick off. So I think it's actually super important. Education is key. We are here at the University of Applied Science Lucerne. They're actually offering a certificate of advanced studies in blockchain and one in crypto finance and cryptocurrencies. Each of them is 3 to 4 months deep dive course into the matter with all the crypto industry experts lecturing. And they're now, again, thanks to the Bitcoin course, fully booked out all the time. It was different in crypto winter. But yeah, we see those people join the course. So yeah, that side, it's actually very important. Education is key, and a lot more needs to be done.
Thank you very much for taking it. Diana, is there something you would love to add?
Yeah, no, absolutely. I mean, I've been head tutor of the University of Oxford Side Business School's executive education program in blockchain for some years and lecturing there for several years. And absolutely, people from all industries, but certainly also regulators, are trying to learn and working on it. And I think they absolutely can. Like, yes, it is quite niche now. The topics can seem quite esoteric. But certainly, there's already been years of people who are looking at these baseline technologies, blockchain technology, and starting to learn and focusing on that. I mean, obviously, like, resourcing is one issue, and this is something that we're seeing across every industry. Everything is turning digital, and this is just the world that we're living in now. It's very meta. And every single industry is looking towards this. I mean, banks, any organization, everybody's looking at how they can hire, and education is as absolutely key from the individuals that will be working in the future in these roles to the ones that are in them today. And I don't think that it's beyond them, but of course, those institutions, like every institution now, needs to have a plan for how they're going to attract the right types of talent, and then also rely on, as they do for other topics, consultants, industry advisors, and partners to help them through that. And one really fantastic thing about this space is that the information is all open. It's all out there. It's incredibly easy to learn and engage and get involved. And yes, while a lot of the topics are difficult, we're seeing more and more people that are really just working on translating that into language and documents and whatnot that is more accessible. Because at the end of the day, this is about being open and accessible and creating a system that's focused on that. So definitely want everybody to be able to dive in, and they are. So that's fantastic.
This is so nicely tapping into my last question, which is the closing question. What shall we all do to enable or to allow DeFi or make DeFi accessible for the billions, the years to come? And it's education, 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 as you guys said. But what else?
A better user interface, please.
Yeah,
I'm counting on you.
Okay.
Marcel. Yeah.
I agree with that.
Fantastic. If nothing else to add, I would love to put my hands together to Diana, to Nathan, to Marcel and Gaspard. Thank you very much.